And good morning, good evening, good afternoon, students and traders. Good morning, good evening, good afternoon to you. How is everybody? How are you? How are you? And welcome to the next lesson. So, big applause to you. Give yourself a pat on the back. You deserve it. You know, you deserve it. Why? Because we are starting module 2 from the manual. Today we are starting module 2. It's called timing and retracement trading. Wow, right? So congratulations to you. Give yourself an applause, pat yourself on the back. All right, so just quickly remember what we're trying to do here. We're trying to bridge the gap between an retail trader way of thinking and doing, you know, bridging the gap between, there is a difference between how a professional trader or an institutional trader thinks and does the stuff, and compared to a retail trader. Okay, so just because we're starting module 2 from the manual, all right, if you didn't receive the manual, dear student, just send me an email to mikefxboss@gmail.com. So from the manual, all right, professional forex trader course, you know, the market phase, right? So how this goes, it's worth repeating because we're starting module 2 just quickly, now not wasting too much time. So you are first an analyst, right? Forex course 101, it's all about the market. You're first an analyst, and then Forex course 202, it's all about the business. By the way, from the manual we finished with euro dollar full analysis. We were bringing all together, you know, and today we are starting module 2. It's support, resistance, pivot points, and it's called timing and the first module was market structure and trends. The title of the first module of the first 16 lessons, I don't even know how many lessons we did, it's called market structure and trends. Now we are starting the module timing and retracement trading. Very important module, because if you want to be a day trader or a trader on the smaller time frames, 15-minute chart, 1-hour chart, this module is essential. Timing and retracement trading. All right, and so you start as an analyst, okay, and if you do good for 1 year, 2 years, so this is an institutional way of growing, you know. If you do good on 1 year, 2 years as an analyst, and when I say if you do good, I'm talking about this thing in here, you know, it's called MyFXBook. It's for free. You can join, open an account and everything. And here, you know, so this is me back in time, and here you have profitability. See here how many trades were won. 238 out of 296, which represent 80%. So if you do good as an analyst, meaning that you are assertive 60% of the time on the 27 currency pairs, all right, 50% it's not enough, because you're going to work for nothing. Makes sense? You're going to win some, lose some. So but you must win as an analyst. This has nothing to do with trading yet. You must get better as an analyst. You must get the direction right, week after week after week after week, you know, at least on 60% of the currency pairs that you are trading. Does this make sense? You can start with 10. So you can start with 10. 27 is too much. Start with 10 currency pairs, and then rate yourself week after week after week, you know. So you must get the direction right from Monday to Friday on 6 of those, 6 of them. 4 it doesn't matter, you know, it can go other ways. Does this make sense? So if you do good as an analyst, then you're going to be promoted to a senior analyst, and if you keep doing good, then you're going to promote you to be a portfolio manager or a trader or whatever. Does this make sense? Alright, did I miss anything else? Never forget, you're going to graduate from this course when you have your chart set up and ready for trading. Are you working on your charts? Are you plotting things on the charts? Are you building your charts? Number 2, you have a strategy in place, step by step. You know, we had a lesson, we're going to have more lessons about what is your strategy, the title, what is your strategy. And number 3, you have a complete understanding of how this market works, so you can analyze the market and make an educated prediction. We're going to work on this today, but it's every class, you know, you're trying to figure out how this market works, right? Module 1, market structure and trends. Remember, if your way is not working, why don't you try mine? You know, and if you want the ebook, you know, free ebook, the little book of trading secrets with this beautiful guy, you know, please visit the website fxbossfx.com. There is going to be a pop-up, right? And if you want extra classes, follow me on Dukas Copy Investment Bank. Sorry about that. My bad, everybody. I need to quiet the cell phone. Pardon, sorry. Alright. So you can follow me on Dukas Copy Investment Bank. It's a YouTube channel. It's called Dukas Copy Academy, alright? Okay, so without further ado, let's go here. And we are starting the module, you know, timing and retracement trading. So, and today we are going to learn how to make money with support, resistance, pivot points, okay? So the module is, we are in module number 2, module number 2 of the Forex course 101. It's called timing and retracement trading. Okay, I'm going to tell you already, it's not that easy. It's not that easy. Timing and retracement trading, it's not that easy. Most of the students in the advanced institutional trader course, Forex course 202, you know, most of, like 95%, they have issues with timing. They got great direction, good analyst, you know, great entry, but they lose because of the wrong timing. So timing, it's big, right? Okay, so I believe this is no-brainer today. Most of you are familiar with, but it's part of the course, it's a lesson. So support, we have support, then we have, but I'm going to tell you a few things you might not know. Support, resistance, like in French, you know, French trading, resistance, support, resistance, and then we have bullish pivot points, bullish pivot point, and then we have, I'm going to clone this, hopefully, and then we have bearish pivot point, all right? Now, how does support look on a chart? We're going to have green for support, we're going to have red for resistance, yeah, we're going to chart 2, and then we're going to have blue for pivot points, all right? So our brain can quickly see and understand, oh, what is happening. All right, what is support? How does support work? Pen and paper, pen and paper, pen and paper. That's the pen and paper. So let's write this down. Support, resistance, and pivot points are areas of potential reversals. All right? It's a trading concept. Trading concept. Support / resistance / PP pivot points are areas of potential reaction, potential reversals, reversals. Okay, why is this important? How does support work? The market is going to come from the upside down, making lower lows, lower highs, lower lows, lower highs, lower low, lower highs, is going to hit support and then is going to react. All right? Bear in mind, it's not a line to the pip, it's an area. Okay, it's an area. So why is this important? In the advanced course, or the pitbull experience if you want, you know, I'm pushing some ears and I'm asking the trader, you know, John or Jane, why did you let the market, so you've entered here, John, example, you are shorting the market here because of any methodology, any strategy, doesn't really matter, You short the market here, you made some profit, John or Jane, you know, you made $700 of profit or $7,000 of profit. Why did you let the market, why did you give all the money back to the market? Why did you do this? Are you doing this? I did this for sure back in time, 20 years ago. I did this for sure. So there is, I know I sound boring, but I'm keep repeating to everybody, there is a logic to this market. There is a logic to this market. You know, you cannot predict 100%, but you can predict this market 70%, 80%. There is a logic to the market. There is a logic to our losers. There is a logic to our winners too. But just for right now, you know, we are going to go step by step. Okay, but just for you to understand why we are learning that support, resistance, pivot points are areas of potential reversals. There are areas that you should not enter. There are risky areas. There are areas that you should really profit take, and there are areas that you should leave the trade open. Does this make sense? This was just an example for you to understand why are we learning now support, resistance, pivot points. You can make some money, but then the market is going to go against you, and it's predictable. Okay, so this is support. Resistance, no brainer, nothing special. It's going to just go from the downside up, making higher highs, higher lows, higher highs, higher lows. Is going to reach resistance and then is going to react. Okay, same story. There are some areas that you should not enter. There are some areas that you should profit take, especially if this resistance it's on the monthly, weekly, daily, but you are trading on the 15-minute or the 1-hour chart. Alright, if this is monthly, weekly, daily, support and pivot points too, but you are on the 1-hour or 15-minute chart, it doesn't matter what, Fibonacci too, you are going to have a loser 7 times out of 10. This is the predictability, it's predictable. Alright, so learn well that support, resistance, pivot points are areas of potential reversals. Alright, potential reversal. Let's put in here, put in here. Alright, now let's color code this in black or violet. Violet. Douglas loves violet. Alright, give me a second. Give me a second. Alright, now what is a bullish pivot point? The specific of how the market works at the pivot points, bullish pivot point is this. The market is going to come from the downside up, making higher highs, higher lows, is going to hit the area of the pivot point, is going to retrace, then is going to break through the pivot point. This is step number 2, is going to break through the pivot point. Step number 3 is going to find support on the other side of the pivot point and then is going to continue its way. Alright, now if I color code this in orange, now look here, if I clone resistance, what do you see? And if I clone support, what do you see? Look in here. A pivot point, it's a mix, maybe not the perfect word, right? But it's a combination, it's a sequence of support resistance. Alright, just for you to spatially see. Alright, and this was charting, we're going to get to charting later. And here we have the bearish pivot point, which is nothing special again, you know, it's bearish pivot point here. It's also a no-brainer, nothing special if you ask me, you know. The market is going to go from the upside down first, lower lows, lower highs. It's going to hit the pivot point area, it's going to react, and then it's going to break through, and then it's going to try to find resistance on the other side of the pivot point, and then it's going to continue its way. Alright? So those are how support, resistance, and pivot points on the charts visually are going to happen. All right. Now, yes, it's no brainer, nothing special. Agreed. Now, what you might not know, let's put this in here, is how the market work at support, resistance, pivot point. All right. The market is going to work in 3 ways. Okay, so I'm going to use support as an example, but bear in mind it happens the same in resistance and pivot point too, right? You have 3 ways for the market to react at support, resistance, pivot point, right? The first one, it's the book example. The market is going to make lower lows, lower highs, lower lows, lower highs, is going to touch the line, but the line, it's an area, never forget, the line, it's an area, is going to touch the line and then is going to react. Okay, we're talking about support. We're talking about support. Give me a second. All right, support in here and clone and clone. There you go. Trading view working well today. No issues with the mouse too. Okay, now the next one that you might be unaware is that the market is going to go lower low, lower high, lower low, lower high, lower low, lower high, lower low, is going to get near the line that you've charted and then is going to react. You know, and this is the difficult one because you don't quite spatially understand on the chart, but you're scratching the head like, oh, why my trade was a loser, you know, the market didn't hit the support. Not true. Happened to be not true. Why not? Because it's not aligned to the pip. If you want to write down something critical, support, resistance, pivot points are not lines to the pip. See here charting, this is AUDJPY monthly chart. See here charting. So I'm building the chart with you and I'm plotting resistance levels, and the blue I'm plotting pivot point levels, but do you see there is a number and it's a line? Alright, remember those are not in the interpretation of the market, especially in the smaller time frames. Those are not lines, those are areas. Alright, more in detail, just give me a second. More in detail is we're going to check charts too. Alright, and the third way how the market is going to approach, the third variation on how the market is going to approach support, is going to make lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, is going to break the line, and then is going to react. Alright, and you're going to struggle again like, oh my gosh, you know, this was a breakout on the downside, right? You don't see the future. You know, oh, this pivot point, it's not valid. Oh, the market is not stopping at the pivot point. You are spatially expecting the market to beautifully touch the line. You forgot that those are areas, those are not lines. This is what your brain is expecting, but this is what is going to happen. Can you relate to this? Did this happen to you when you trade? You're an analyst, you're not a trader yet, you're an analyst. Alright? Oh, I don't want to be. If you are going to go with me in the future, possibly work with me or trade with me, you know, or with me or for me, whatever, you know, this is how it goes. You know, you're first a junior analyst. I don't want to be an analyst. Nobody knocks on the door of JP Morgan Chase or Citibank, you know, and they open the door and you say, oh, I want to be a trader, and they say, oh, you know, John or Jane, oh, there is the desk, you know, there is the desk with a few $1 million, just go and trade. it doesn't happen like this. I mean, I would like to, right? We are in the same boat. I would wish, you know, back in time, me too. But institutional traders, we are groomed in a way, you know, makes sense? Everything makes sense today. Not everything made sense to me 20 years ago, 15 years ago. Today everything makes sense to me. Alright? So, we covered what is support, resistance, pivot point. We covered that you have bullish and bearish pivot point. We covered that support and resistance pivot point. The market in those three areas can behave in three different ways. It can touch the line, because we're going to chart the line. It can get near the line. Bear in mind, it's still a support level, it's still a level of support, resistance, pivot points, or it can break the line on the chart and react. Okay? If you want, take a screenshot. Take a screenshot of this, alright, with your cell phone. I'm going to sip a little bit of coffee. Aren't you glad that you're learning this stuff? Aren't you glad if you're learning this stuff? If you are on any platforms, give it a like, okay? You are helping me grow the channels. Give it a like if you're on any platform, if you can, you know. I'm not sure where you're looking or watching, you know, or doing this course. Give it a like if you can. If you find valuable, true, you know. Alright, so support, resistance, pivot points. Okay, now before we go into trading, we need to build our charts, right? Never forget, you are going to graduate from this course when, number one, you have your chart set up and ready for trading. We're going to do this right now. By the way, we were just covered number 3. You have a complete understanding on how this market works, so you can analyze the market and make an educated prediction. Alright? So we are here and we're going to use AUDJPY monthly chart. Okay, so charting concept. We chart support, resistance, pivot points from the monthly chart first. Alright, it doesn't matter if you're a scalper, it doesn't matter if you're a day trader, it doesn't matter if you're a swing trader. The general view is we chart support, resistance, pivot points from the monthly chart, alright? And Forex course 101, lesson number 1, we've learned that the Forex market is nothing more than a contract between the two countries, you know, and those two countries, I'm going to get out of this one, those two countries, you know, are going to most likely respect the value of the respective currencies, because they want to maintain the international trade stable. Import, exports, end of the story, you know. You don't need to, this is the simplistic approach. As a technical trader, you don't need to know more than that. If you want to, you know, if you want to learn more why and how, you can research other books. Okay, so this is the monthly. And you've learned the first and number 1 and most important and the cardinal rule in the Forex course 101 when it comes to making money. The higher time frame controls the smaller time frame and price action. The higher time frame controls price action and movement on the smaller time frame. This is the cardinal, most important, most relevant rule. You can learn support, resistance, pivot points, candlestick formations, Fibonacci's. Without this concept and rule, no money for you. No money for you. There is a logic. I'm not arrogant. Oh, you want... There is a logic to this market. Try to understand this. There is a logic to the market. Okay? This is then... because this is how in the advanced course you come to what is called an edge. Does this make sense? There is a process to follow, an institutional way, institutional process, formula if you want, how to come to an edge. All right, but to come to an edge you must learn first that in the Forex course 101 that there is a logic to this market. Does this make sense? There is a logic why the market is going to do something 7 times out of 10. Wow, great probability, right? So now that we know about the monthly bands, I'm going to put chart with me, all right? Do this with me, because we are going on the upper band. So firstly I'm going to see resistance. So this is why there is no right or wrong on the style. Okay, there is no right or wrong on the style, but me, I'm going to chart red. Okay, now what I'm looking for tails, candles, tails, or wicks, you know, and bodies. All right, so if you can see here on the right, you know, the market hit, you know, there is a tail, or it's a wick of the candle, a tail, you know, and here, you know, it hit 2, right? So I'm going to leave this one like that. Okay, and don't stress out. Plotting on the chart, support, resistance, pivot point, it's a little bit subjective. Okay, so don't stress out like, oh, my line, it's not a line, it's an area. My line, it's at 109.353, and your teacher, it's at 109.453. Oh, is there anything wrong or no? Or tell me your pivot. Those are areas. Okay, don't stress out. Okay, it doesn't matter, because this is the monthly chart too. So it doesn't matter if you leave the line here or if you do something like this. Doesn't really matter. Okay, I know this goes into some of you, in the nose of some of you, you know. I have a few mechanical engineers and chemists, you know, they have the intellectual mind, you know. You have 2 minds, the intellectual mind, you know, the analytical mind, the analytical mind, and then you have the artistic mind. Analytical minds suffer because they want to see to the pip, you know, it's the micro. You need to be more flexible here. Okay, so don't stress about if the number on the line, which is an area, it's 1.7 or 1.6 or whatever. All right, so this is how you chart. You put a horizontal line, and let's scroll down, 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 down. You're looking at the price action, and there you go. So see, I didn't put it exactly, give me a second, I didn't put it exactly on the top. See in here, I didn't put the line exactly at the top. Can you see it? Why not? Because on the right side, you know, here is the candle, you know, the white one, the smaller one. See? Okay, now somebody's going, or maybe you are asking yourself, oh, can I do this like this? And if we look on the right, it's far away. So the answer is yes, you can do this like that, but then this means that you're going to have another line like this. Does this make sense? There is no right or wrong, by the way. You can have 3 lines, okay, because here it's 1, you know, and here is none, right? Or you can do what, like I do, you know, I'm going to have just 1. I know it's an area. I know it's an area. Listen to me. I know it's an area because I've learned that the market can do this. The third example. Alright? But again, there is no right or wrong if you want to have 2 support, resistance, pivot points, or resistance. This example, you know, have 2 lines. It's not really an issue. Okay, give me a second. And again, the next one. Red, scrolling down, scrolling down, scrolling down, scrolling down, scrolling down. So here is a tail. Alright, the market hit this one. Now if we zoom in, alright, and so nothing on the right. Well, maybe here, you know, it's an area, right? Here the market reacted, and here, look at the tail. No, no, you don't need to listen to me. Nobody, there is no charting rule that is saying, oh, you must connect highs and lows. Okay, because this here from the monthly, this, come on, trading view, so this here, it's not a high, agreed? The white one. Is this a high? No, it's not. This is not a central candle with 2 candles on the left and 2 candles on the right, agreed? But the market still reacted. Can you see the tail? The market went up, 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 and then pushed down, 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 down. The market still reacted. Can you see it? If I go on the 1 hour chart, in here, I'm going to see an uptrend turning into a downtrend. Okay, it doesn't need to be, it could, but it doesn't need to be necessarily a high or a low. Not to talk about candlestick formation, it doesn't need to. Okay, so this is a tail, and I would like to show, but if I go on the 1 hour chart, it's going to be a decade before. Let me see, maybe from the 8 hour, right? What is going to happen if I go on the 8 hour chart? Sinking layout, give me a second. I really wanted to see this, you know, I really wanted to see how it changed 4 hour chart. We are in 2022. Give me a second. Need to get back. So our line is at 07, 07. 4 hour chart on the 07. 19. Oh my gosh, 07. Alright, give me a second. Let's go to the 8 hour chart, alright? 8 hour chart. 8 hours. 8 hour chart is going to be better. Give me a second. There you go. There you go. Can you see the reaction on the candle? Can you see? The market was in an uptrend, and this is the tail from the monthly candle. And then it changed and went to, see? You have a resistance in front of you, and the market is going to react 7 times out of 10, right? Not the beginner trader, but advanced trader. I'm going to push some ears. As a matter of fact, I am pushing a few ears, you know, ears, pardon my pronunciation. You know, John, why did you buy the market up in here? Or Jane, why didn't you profit take up in here? Here, you have no chance of you know, you have no chance of salvation, if you want, you know, maybe not the best word, you know, because it doesn't matter 1 hour chart, 15-minute chart, you would be stopped out. Okay? This market is predictable. If you are willing to listen to me, I don't need you to agree with me. I don't need you to do, oh yeah, oh yeah. I need you to ask questions. If something doesn't make sense to you, I need you to ask questions. I don't need you to agree with me. I'm trying to make sense out of the market. I'm trying to help you make sense of this market. But if you don't agree, ask questions. No, I don't see what you see, or I don't agree on this one, or I don't agree on that one. Okay? I don't need you to do, oh yeah. Okay? Back to charting. So I'm going to leave this like this, and here. Okay, give me a second. Would this be a pivot point? Here not, here not, here not. Would this be a pivot point? Here is an issue, right? Here is an issue. Okay, I'm going to change the colors on this one. I'm going to make it blue. Okay, remember what is the characteristic of the pivot point. Okay, the characteristic of the pivot point is that you are going to have a high or a tail and a low at the same level, okay? So to be a pivot point, you must have a high and a low. It's like touching, you know, touching each other, you know, or getting near each other, okay? It's a little bit subjective, you know, I must admit this, you know, charting support, resistance, pivot points, it is a little bit subjective, you know, subject to interpretation. Okay, so pivot points, the next one, blue, and now going down, 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 then looking left and right. I found one on the left, in between here. If I touch one more, okay, there you go. And again, there is no right or wrong. As you can see, out this one, out this one, out the arrow. As you can see, the market broke in here, but it touched in here, near in here, you know, nothing in here, and it touched in here and touch, see here, touch, it's a pivot point, touch from the upside down and touched from the downside up. Can you see it? This is a pivot point now. Now, you know, you might be asking, okay, but what about this tail? It's in between, you know. Well, we're going to chart in here. Okay, so this tail, it's maybe a little bit like this, and I'm going to color code because it's question mark. On the right, I don't have anything. In here, I don't have anything. But here, yes, so it's a pivot point, right? So this level reacted to here. So, alright, it's a confirmed pivot point again. Alright. Okay. Now, if you get tired, like most likely you are when you are building your charts, you know, you go and you chart support, right? You go from you take the horizontal line, color code in green, and again, do this with me, chart with me, you know, scroll up, scroll up, scroll up, and this is the first. Another thing that I advise you to do, make it transparent. Okay, so this would be the first one. This would be now the second one, you know, clicking the mouse, going up and up and up, and here this would be the third one. Still support, still support. Okay, now going up, 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 up. I have in here, right? Now that's a pivot point again. Why is this a pivot point? You must look at the monthly bands, the whole price action, okay? Because the market hit the area from the upside down and from the downside up. See in here? Okay? Here, no, this is not relevant, the left one, but here went down and went up, right? Let me show you something quickly. Let me show you theory now on the live chart. Bullish pivot point. Copy. Bullish pivot point and paste. Where did it go? Paste. Ah, up there maybe. Oh, here it go. So I need to bring it down. Sorry about that. Need to bring it down. Sorry about that. Alright. This is theory. This is theory. Bullish pivot point, right? Okay, this is theory. So now remember, we are on the monthly, right? You are not going to see hard highs, hard lows. Okay, but if we go on the weekly, don't do this as per charting. I'm doing this just to show you price action and the predictability of the market. Okay, did we or didn't or don't we have, do we have or don't we have, and maybe not even, so I'm looking at this. Okay, so it would be hard highs, hard lows, reaction, breaking through and then back, so not even on the weekly. Let's go to the daily. Daily, 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 daily. Give me a second, almost there. Daily, not this one. Almost there. There you go. Okay. Can you see the daily now? Nobody says how long, alright? So, or yeah, maybe not the perfect example. Maybe not the perfect example, right? Yeah, I need to find another one. I need to find another one. Alright, so I'm going to clone and I'm going to put it up in here. Okay, and then we're going to go on the monthly. So here we have everybody. Higher highs, higher lows, higher highs, higher lows. Hit or touch the pivot point, reacted, went through, found the past support on the other side and then went up, right? So let us see if this would be valid as an example on the monthly chart again. So back to the monthly, back on the monthly, give me a second. Alright, is this a pivot point area? Yes or yes? So low, low, high, right? So the market touched from the downside up, upside down, downside up, right? Here not, it's an area, alright? But the market is here, you know, touching beautifully. I mean, this is a textbook pivot point. Okay? Can you see the predictability of the market, you know, in this example? Okay. Alright, congratulations to you. This is our... We're going to end the lesson because it's too much already of information. Rewatch the video, download it, study the charts, and homework. Build your charts. Put support, resistance, pivot points on the monthly chart of the currency pairs that you are going to trade. If you're going to trade 27 currency pairs, just put on 27. And good news, you don't need to do the double work. You do this once on TradingView and you just look what is going to happen. Okay, so I have the monthly and the weekly. Give me a second here, that's the weekly, here is the daily, alright? Now, you do once on the monthly, right click, sync in layout, 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 right click, sync in layout. You don't need to waste time doing this on the monthly and the weekly and the daily. You don't need, you do it once, you just sync in layout and you have all the support, resistance, pivot points on all the 4 time frames. It's good news, right? Okay. Boss, I don't have time. Do 1 currency pair per day. Okay. Boss, I don't have 15 minutes. Then what can I tell you? You know, I don't have 15 minutes per day. You know, do 1 per day. Do euro dollar today. Do AUD CAD next day. What can I tell you? I cannot accept you in the advanced institutional program without your charts set up and ready for trading. Does this make sense? How can you come to an edge? What is an edge in the advanced course? Alright. An edge is a statistically proven fact. You're not going to understand this emotionally, it's too soon. But an edge is a statistically proven fact that your strategy makes more money than it loses through time. It makes more money than it loses. There is a losing part to every strategy, every methodology. Listen to the boss, don't fall prey to other teachers, TikTokers, you know, selling you, you know, holy grails. Every methodology, I promise you, every strategy has drawdowns and losing trades, losers. Okay? There is no strategy that wins 100% of the time. And don't mix apples with bananas. The winning rate, you know, it's not the same as a winning strategy, you know, in the sense of just it has just winners. All right, everybody, thank you very much for today. Pat yourself on the back. Good job. See you in another lesson, and build your charts. Until next lesson, this is Mike. See you next time. Bye bye.